Hey guys, it's Nick, and I know 2020 has been a crazy year, but it just got a little bit crazier. And what I'm talking about is Berkshire Hathaway buying into Snowflake. Warren Buffett said that he doesn't like gold, and yet he went and bought a gold miner. And he also said he doesn't buy companies that he doesn't understand, and they just bought into a really complicated company called Snowflake. Now, is Warren Buffett losing his mind, or has hell frozen over, or what? What is going on? Normally, Buffett buys things that are pretty simple, have a moat around them, are profitable, and are easy to understand. Things like Coca-Cola, banks, airlines, oil companies. But recently, he's been dumping all that stuff. He sold his airlines, he sold a bunch of banks, Wells Fargo, JP Morgan, he sold his Occidental Petroleum, and what's he buying now? A really complicated tech company. I don't know about you, but if you ever traded stocks, sometimes you buy a stock and it goes down and you get angry, and then you short it because you think it's going to zero, and then it goes back up. And you get whipsawed and you think to yourself, if only I did the opposite of what I normally do, then I'd make money. Kind of like the Seinfeld episode where George Costanza does the opposite of what he normally does. So, is Buffett frustrated by his usual plays of banks and things like that, boring stuff that he's losing money on, so he's like flipping the script and saying, you know, he's going on tilt and saying, let me go buy the craziest tech company with no earnings at full price that I can. Not likely. He just turned 90. He may be getting a little slower in his old age, but he's not crazy. Most likely, I would say 99%, it's one of his other two financial managers, investment managers that are buying this thing for him or for Berkshire Hathaway. But I could just imagine the conversation that they have with Buffett bringing him this idea. Here's Buffett licking his wounds after selling all these banks and airlines and stuff, and one of his managers comes and says, hey, I got this idea for this company that we want to buy. And he's like, yeah, great. How much income do they have? Oh, they made $240 million in revenue in the last 6 months. And Buffett says, yeah, that's great. How much were their profits on that? Well, they lost $170 million on that. And Buffett's like, oh, that's not so good. Well, at least we're probably, if they're losing money like this, we're probably getting a really good price on it, right? What kind of valuation? Well, they just did an investment round in February where they got $479 million, and that was at a valuation of $12.5 billion. And Buffett would be like, okay, so what are we buying it at? Well, we're buying it at a valuation of their IPO price at $80 a share, which is a valuation of about $22 billion, $23 billion. So almost twice as much as it was just back in February. So those are two strikes already. And the last question Buffett asks is, so what do they do? And the investment manager is probably like, I'm not even going to try to explain what the hell they do because I barely understand it. So what the hell does Snowflake do? Well, let me tell you, I just read a bunch of the S1 filing for their IPO, and it took me a while to figure out kind of what they do, and I'm still not really sure, but here's the gist of it. So you have Salesforce.com, which is kind of like a cloud software service for salespeople and stuff like that. It's kind of like that, and Salesforce is also buying a piece of Snowflake along with Berkshire, and so they have a relationship with them. And so the idea is that companies, instead of keeping their own data centers and having their data not accessible between departments, between countries and offices and stuff like that. They put it all in the cloud, which Snowflake manages, and it manages it on other cloud companies, Google, Microsoft, and Amazon's cloud, and it's interchangeable between all those different three clouds. So you're not stuck into any one cloud where you're kind of stranded there with all your data, and it's very hard to move if you wanted to move it. So they have software that kind of keeps it within all three of those, and then you can do all kinds of things with that software. You can analyze data, you can give data out to certain data to specific customers or something like that. And instead of paying big licensing fees for software up front, it's kind of a pay as you go kind of thing. So you're only paying for what you use instead of buying a license up front. So that's kind of the direction a lot of the software is going, software as a service kind of thing. So that's kind of what they do. But reading the details of it, it's really complicated, talking about data silos and data lakes in the cloud and all kinds of stuff. I have no idea what most of that stuff is, and I'm sure Buffett, his eyes would glaze over if he just read a little bit about it. So Buffett is not doing this investment in Snowflake. Berkshire's other two investment managers probably are. But why are they buying Snowflake, and what's the story with their IPO and their revenue and their growth rate and all of that? So they filed the S1 so they can do an IPO, and like I said, they're gonna shoot to do it around $80 a share, the range 75 to 85. And so Berkshire and Salesforce agreed to buy about $250 million each of this stock at the IPO price, whatever that is. And when I say IPO price, of course, that's the IPO price that the underwriters sell, Goldman Sachs and these guys, that they sell to the hedge funds and the mutual funds before it actually trades. So that's kind of like the good price. Okay, so that $80 is not going to be where it opens up when it trades on the stock market. Of course, it's going to be higher because there's a lot of interest in this and stuff like that. But Berkshire is agreeing to buy $250 million worth at $80 a share, along with Salesforce. And Berkshire likes this thing so much that they also agreed to buy another $250 million in a private transaction from a private holder of the stock, outside of the publicly traded, trading of it. So Berkshire likes this thing so much that they're putting in $500 million. Now, that's not huge for them, but it's not something to sneeze at either, especially for a company that's losing money. So why are they buying this thing? Well, let's look at the numbers. Their 2019 and 2020 revenue is $96 million for 2019 and $264 million for 2020. That's a huge growth rate. And when I say 2020, I know the year's not over yet, but their year ends January 31st. So when I say 2020, that really means 1 month of January 2020 and the 11 months of 2019 before it. So their 2019 numbers are really kind of like 2018 numbers. But they grew like 150% year over year on their revenues, and comparing their 6-month period ending July 31st, 2020 to 2019. In 2019, they did $104 million in revenue, and 2020 they did $242 million in revenue. So in 2019 they lost $178 million. In 2020 they lost $348 million. In the first 6 months of 2019 they lost $177 million, and in the first 6 months of 2020 they lost $171 million. So basically they peaked at their losses, supposedly, comparing to last year, and now the losses are going down because maybe they don't need to advertise as much or put as much into R&D, and so their revenue is going up a lot, and their costs are either staying the same or going down per dollar of revenue. So their margins are actually getting bigger, and so they've increased from in the 40s and 50s% gross margin to 60%. So that's something that a lot of people like to see, big numbers that they have and huge growth in revenue and actually increasing margins. So that's something that catches a lot of investment managers' eyes. And for some stats on their customer base, they grew their customers from about 1,500 a year ago to 3,100 customers now. So their customers have also increased, and they grew the amount of customers that have over $1 million a year in revenue with them, from 22 customers last year to 55 customers this year. So that's a pretty big growth rate. And one of their biggest customers is Capital One Financial, and they do about 11% of the total business with them. So that's kind of good. That's a selling point. It's a big company and all of that, that they're useful to a big company like that. But it's also not so good when you have one customer that's 10-11% of your total revenue. But because they're growing so quickly, I'm sure that percentage-wise is going to go lower as they get more customers and bigger revenue. Capital One will be a smaller percentage of that revenue. But I still can't get over the fact that Berkshire is buying this thing, because they have about 278 million shares outstanding at an $80 IPO. That means their company has about a $22 billion market cap. And like I said, they have no earnings. So if you take that $22 billion market cap and divide it by last year's sales of 264 million, that's about 90 times sales. Okay. You see in the news recently, there's a lot of articles about these companies selling for high multiples of just their sales, like Tesla and all this stuff. And here's a company that's right up there with them at 90 times sales, and yet they're still willing to buy this thing. So what does that mean? Either they just, completely given up their discipline, or they know something that most people don't about this company, and it's going to grow into that, it's going to be profitable pretty soon and start doing some really big numbers and eventually get some net income. That's what I'm assuming, that's what they're thinking. So in terms of the IPO, should you buy this IPO? I don't know. It's going to IPO at $80 where it opens. It's probably going to be well above $100 a share, which is, maybe a lot for some people when they see that. But it's very popular. It looks like a lot of big names are in this thing. Salesforce.com is investing in them, and somehow has some kind of, they're working together to make sure that Salesforce customers are able to access from Snowflake and stuff like that. So they have some kind of partnership as well. So there's a lot of big names in this thing, a lot of smart money and all of that. So I expect that this IPO is going to do really well. I'm not saying you should buy it. I'm not saying you should not buy it. But, keep an eye on it. And now you know what it's all about and why Berkshire is buying into this thing in the first place. So that's my video on Snowflake and why Berkshire bought into it. If you like this video, please give me a thumbs up for the YouTube algorithm, and leave me a comment and let me know if you think this is going to be a really good IPO and maybe even better than Palantir. What do you think? Leave a message in the comments. And as always, if you haven't subscribed, please subscribe now. Thank you for watching.